Greetings, very happy to connect with you all again through this video. Today I am going to speak something very interesting and what investors should be knowing while making an investment decision. Top 3 things which an investor should be looking while investing. So before going there, we would like to understand that there are two factors which always affect our investment decision. One is the greed and fear psychosis. So this is a very interesting phenomena and a human behavior and a human trait where we take decision based on greed and fear. But if the investment decisions are taken through greed and fear, the outcome can be very deadly. And greed and fear is a phenomena where it actually swings between fear to greed and greed to fear. Meaning it is not binary where there are individuals who are fearful and there are individuals who are greedy. The greed and fear is within an individual where some pockets are fearful and some pockets are greedy. That is where people take investment decisions very irrationally. Though it sounds very illogical, many investment decisions are taken irrationally. So this is a live chart which explains, and a lot of study has been done how investors take decision when they make an investment. When things are looking very good and going up, normally investors keep buying and they actually take decision based on the greed, because everybody else is making money, so I should also be making money, not really understanding whether it suits their requirement or not. And similarly, when things actually go against, people actually get very fearful because they are seeing the loss of their investments in front of their eyes, so they actually become very fearful and they sell. So at a rational level, this looks very illogical, because when things are low, we should be buying, and when things are actually expensive, we should be selling. So today, gold is actually somewhere here where it is actually on the rise, and ideally we should be selling. But gold is one interesting asset where it is never bought to be sold, but we keep buying whether it is high or low. So gold is actually an exception, especially in India, because nobody wants to sell gold at any point of time. Today, equity is somewhere here where there is a lot of fear in the market and there is a lot of uncertainty. So ideally, this is definitely not the time to sell. Ideally, we should be buying. If not, at least it is not the time to sell. But time and again, investors have always come when markets are doing well, meaning they've been investing when markets have been good. And some of them have actually been taking out money when things have been bad, like situation like today. So that is what Warren Buffett says: be fearful when others are greedy. So when everybody is greedy, that everybody is making money, so ideally that is the time to sell and book some profits. And ideally when everybody turns fearful, that's the time to buy. And just by doing the most logical thing, somebody like Warren Buffett has become one of the biggest investors ever. So many people actually during the fearful time, they actually look for some guaranteed returns. Guarantee as a word is very tricky, and especially when it comes to investment, it is very tricky. So many people actually, when they are fearful, take a investment decision of locking their money for a very long period of time at a very low interest just because it is guaranteed. Like some of the insurance products where they actually offer you a 3-4% kind of a guaranteed return. Whereas you could have actually kept money in an FD, which is almost guaranteed, and you actually get 6-7% of return and with full liquidity, or the money is always under your control. And also the guarantee can also be given on the higher side. So there are some products which are available in the market, like the Ponzi schemes, which offer way higher returns than the market, say a 20% return per year or a 40% return per year. People actually go and invest there also, but that guarantee is never fulfilled. So guarantee is very tricky, so we need to be really understanding from where the guarantee is coming. So nobody will guarantee until they are 100% sure that they will make money. To guarantee returns at 4% is very easy. To guarantee money returns at 20% is very difficult. So be very clear in what you are looking for and what you are doing. So ideally, how should you be taking investment decisions? The investment decision should be ideally taken through considering all these three parameters: risk, return, and liquidity. Ideally, we keep hearing about this risk and return always. So risk is nothing but when you are very fearful, you only focus on the risk, and when you are greedy, you focus on the return. And liquidity is one thing generally not taken into consideration when making a investment decision. That's one of the reason in India majority of the money is lying in real estate and gold, though gold has liquidity, but that is never going to be sold. So investment decision should never be taken on silos. Ideally, you should consider all the three factors and take an investment decision. But again, a peculiarity in India, investment decisions are actually taken through tax angle. Again, saving tax and being tax prudent is always good, but that should not be the one and only motive of taking any investment decision. But generally, many people take investment decision based on taxes. Yes, tax is an important component. You invest in a product which actually suits all the other requirements, and you also get a tax benefit. Ideally, that's a win-win situation. So what is liquidity? Liquidity is actually your oxygen. What is liquidity is nothing but an ability to convert your investment back into cash at the least possible time. So today in a situation like a lockdown or a crisis, people understand liquidity more than ever, because many of the people are actually asset rich and liquidity poor. So ideally we should be striking a balance whenever we make a investment decision. What I mean by asset rich and liquidity poor, so out of my 100 rupees what I have, if I had invested 70 rupees in real estate, naturally that cannot be sold today. Assuming I have invested another 20% in gold that I am never going to sell, so that means out of my 100, 90% of my money is illiquid or cannot be, or I don't want to liquidate. So with the remaining 5-10%, meaning taking decisions is very, very difficult and you actually cannot take decision. So ideally your money should be under your control, but majority of the people actually money controls us, because whenever they provide liquidity you will take. So when real estate is doing well, maybe you will try selling it. So that means only when the asset is doing well and the asset wants you to exit, you will exit. But that's again illogical, because the money what you have hard earned should be under your control and definitely not other ways. So if we can follow a set of principles, and that too in the same ranking, like whenever you make an investment, first make sure you have adequate life cover, and then comes your health cover, and then comes your contingency reserve. So contingency reserve is nothing but your emergency fund, where you keep 3 to 6 months of your salary or running expenses always in a place where you can liquidate it at any time. So which actually gives you a lot of comfort in any situation, and especially today it gives you a lot of comfort, and you are better positioned than many of your colleagues and friends because you have some money to keep running and staying afloat. After doing these three things, if you can actually focus all your other resources in creating financial assets, it could be FD, it could be mutual funds, it could be other products, these will be ideally offering you very high liquidity. Whenever you need money, you will be able to take. So ideally create your initial corpus of maybe a couple of crores through financial assets, and after that you still have some money left, you can actually try and build real assets. If you do the other way of buying the real assets first and assuming you've not saved enough financially, then you can be in a very wrong situation like today, where you need money and you cannot liquidate money. So the most important thing is create liquidity in the portfolio, the most important thing. So with this I would like to conclude, and thank you all. Hope you are all safe and please stay home. Thank you.